Today we're talking about something that a lot of people have a lot of confusion about. Chris, you are still in the bat cave, hanging upside down. What are we talking about today?
It's actually my computer that's upside down. So, yes, I guess I am upside down since you can see me correctly. Well, we get this question a lot when we deal with a lot of our preferred referral partners.
Yeah,
Um, and we, have to obviously evaluate this when we want to see if we want to work on a claim because there's some
definitely.
important deadlines. And we've talked about these,
Right.
but we're going to actually we're going to show you guys specific examples in 5 different insurance policies where some of it can be a little bit vague,
Right.
ambiguous.
Right.
Some is clear cut, right to the point. And what we're going to talk about is the time limit to actually file a claim from the date of the incidents. And then we're also going to talk about or show you in different policies the actual time limit to complete those repairs, so that way you can recover your depreciation.
Yeah.
So,
All sorts of confusion around this. I think it stems from the old school way of getting things done to what has occurred recently over, I'd say, the last 15 years. And most policies dictate from the date of loss,
mhm,
not, I repeat, not the date of discovery. Okay. That no
correct. That's a big
longer,
difference.
I haven't seen that in a decade or more, right? I've been doing this
Mhm.
going on 11 years and I don't remember a single policy. I could be wrong because I've dealt with almost 1,000 claims now, but I don't think I remember a single policy that has said from the date of discovery.
Yeah,
That's just me. Chris, have you seen one that's date of discovery?
I have not yet. No.
Right. And so what I want to make sure you understand as referral partners and insureds, property managers, whatever you might be, is that the policy is based on the date of loss as best
Mhm.
can be established depending on what type of loss. Hailstorm, windstorm, there's a ton of atmospheric evidence and information that you can base that date of loss on, which is what the insurance companies do with a hail history report or a wind history report. Pretty simple. Now, if there is a burst pipe in your commercial property that happened 3 weeks ago and you are out of the country and you're the only tenant, like that's kind of maybe a little less exact, but maybe based on the water usage and things like that, it can be found. So
Mhm.
I say all of that to just tell you that it's based on the date of loss, not the date of discovery.
Mhm.
Again,
Absolutely.
one out of 1,000 policies might be date of discovery. We're not talking about that one. We're talking about the other 999 that's based on the
Mhm.
date of loss. So, with that said, Chris, what do we have for the folks watching?
Yeah, so we're going to show you some different examples of how this verbiage looks like and how you can kind of help find this verbiage because
Right,
a lot of it's kind of the same, but a lot of it's different. So we're going
right.
to
There's
show
just
you this
nuances that are just slightly different
exactly.
on each one, but they all pretty much say the same thing. So, go ahead and pull it up, Chris. Let's take
Yep,
a look. And
yep,
so,
absolutely.
we took a snip image from 5 different policies, commercial
Hmm.
policies, and we're just going to go over it. So, first one, time to file a claim versus time to be able to recover the depreciation. This one
Correct.
here says, give us prompt notice of the loss or damage, include a description of the property involved. That's when you have time to file a claim. Now, I can tell you from dealing with the back end of a claim where it has gone legal, prompt notice is not 18 months. Prompt
Uh-huh.
notice has been, I think, determined by most case law. We're not attorneys, but I can read, which is weird. I know you don't think I can, but ultimately it's like 9 months ish, which falls into most of the
That's
claim,
crazy.
most of the
Yeah,
policies
that's
that say you can
yeah.
make a claim within a year. This one also says recoverable depreciation. We will not pay on a replacement cost basis until you actually repair or replace the lost or damaged property. The repair or replacement of damaged property must be made as soon as reasonably possible. What does that
Yeah.
mean? But in no event later than 2 years after the date that you sustained the covered loss or damage. Do you know what that date that you sustained the covered loss or damage is called?
Yeah.
The date of loss.
Date of loss.
It's
It would
not
be
the
a
date
lot
of
easier for them just to
discovery.
put that in here, but no.
Right.
They gotta
It's not the date of discovery, it's the date of loss. Chris, what's the
yeah.
next one say?
Yeah, the next one here is, as you guys can see,
It says file a claim. We will only pay for covered damage or loss sustained during the policy period and discovered no later than 1 year from the end of the
end
policy
of the
period.
policy
So
period.
this one's a little vague. What does that actually mean? Well,
Mhm.
we go back to the experiences that we've had. 1 year, prompt notice. If you don't fit into that and say you have to go to court, it's probably going to go in the favor of the insurance company based on my experience. Again, not attorneys. Recoverable depreciation, blah, 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 same thing, right? It's so similar that reasonable necessarily not to exceed 2 years unless we agree in writing to a longer period. So most commercial policies that we've run into is you have 2 years to recover the depreciation from the
Yeah.
date of loss. Chris, next one.
Well, it's funny too. They didn't actually say the date of loss on this one, which is funny. They just said not to exceed 2 years. 2 years from what? So, anyways,
Yeah.
all right. This one here.
Actually, if
File.
you scroll back up there, let's see that other one, and it does say as soon as reasonably possible after the damage or loss, not to exceed 2 years. So yeah, you're right. Okay, let's go to the next one.
Yeah. So this one here, we got the file complaint, recoverable depreciation.
So we will only pay for covered loss discovered no later than 1 year from the date of termination of this coverage or the end of the policy period, whichever occurs first. However, this extended period to discover loss terminates immediately upon the effective date of any other insurance obtained by you from another insurer, replacing in whole or in part the coverage afforded under this insurance. What the hell does that mean? You're gonna have to be an attorney because I do know what that means, but it would take us a lot longer than I have in this video to describe that
Yeah.
to you. But it's a huge cluster. It is messy. I would definitely consult an attorney if you or your
Yeah.
insured has this and they're looking to get new insurance. Tread with caution.
Yeah.
Recoverable depreciation unless the repair or replacement is made as soon as reasonably possible after the loss or damage, not to exceed 2 years. We may extend this period in writing. So similar to that last one, but again,
Mm-hmm.
like Chris said, it says when the damage occurred, but does
Mm-hmm.
that mean the date of loss? I think in
Exactly.
any reasonable setting that's what that means. So this one, as soon as possible, give us a description of how, when, and where the loss or damage occurred. It says very specifically what you must do for this
Mm-hmm.
insurance carrier. Recoverable depreciation, unless the repair, reconstruction, remodeling, or replacement are made as soon as reasonably possible after the loss or damage, not to exceed 2 years. We may extend this period in writing. So again,
A lot of this sounds the same.
yeah, some of you'll see this pattern of like 2 years. So
Mm-hmm.
just know that that is not 2 years from the date of discovery. Notice that is not 2 years from the date of the claim being filed. It is not
Mm-hmm.
any of those. It is from the date of loss, unless otherwise specifically stated in writing. And if there's any confusion, you can do what's called a coverage analysis if you're a public insurance adjuster or an attorney. If you are a contractor, we would tell you to avoid this because this can be misconstrued as unauthorized practice of public adjusting. You do not want to get into that. Trust me, we don't want to have a conversation related to that. But what I'm telling you is if you're a public insurance adjuster or the insured directly, you can call the adjuster and have a coverage analysis call and have some of these questions answered by asking the right questions. Chris, what's this last one say?
Yep, this last one here, following a claim, kind of the same verbiage we've been seeing here. We will pay only for covered loss or damage discovered no later than 1 year from the end of the policy period.
Right. And so
It,
most policies are 1 year at a time.
yeah,
Okay.
exactly.
And what does that mean? I guess if it maybe you still have 9 months left and then that like so it needs to be clarified directly with a party from the insurance company in writing. So the
Mm-hmm.
last part is recoverable depreciation, very similar. We will not pay on a replacement cost basis for any loss or damage until the loss or damaged property is actually repaired or replaced, unless the repairs or replacement are made as soon as reasonably possible after the loss or damage. So
So they don't give a date in this one.
they
Yep.
don't give a date. And so you'll notice some of these policies that don't have as much specificity is because these people are paying a lot more. I guarantee one of these policies is based on one of our clients that has a $500 million blanket policy coverage because
Mm-hmm.
they own huge buildings all across the nation. So the
Yeah.
more you pay for your coverage, the more lax they are, the less you pay
Mm-hmm.
for your coverage, the more specific they are. Makes
Yeah.
sense. Anything else? Final word, Chris?
No, to your point, and this is what we do. This is why we're professionals. Anytime we receive a policy, we do our own internal policy review, but we're also going to do a coverage analysis call just to confirm that we've got all these dates. And, it can be reasonable. And sometimes they say, yeah, 2 or 3 years. That sounds reasonable. 4 years even. And I'm like, we'll put that in writing. I need it. So, anyways,
Yeah, I
so
have
that's
worked
what we
on
do
a
here. That's what
claim.
got to come to us.
I have worked
Yeah.
on a claim when one of these Cadillac policies that was beyond 3 years from the date of loss, insurance company paid the claim.
Yep. That's
Okay.
great.
So it really is determined by what is in writing in the policy or what you can get the adjuster to agree upon in writing as an agent or representative of the insurance company. So thank you so much. I know that was a lot of stuff. It's a little confusing, but we just will wrap up with this. Date
Hmm.
of loss, not date of discovery, not date that you filed the claim. So contact us for clarification regarding this video and the crazy policies that you're going to run into.
Hmm.
BellatorClaims.com. Please like, comment, and share this video and subscribe to our channel. Thank you.